everyone. This is Venture Investor Forecast by InnMind, and today we have one of the top investors from Silicon Valley, co-founder and managing director of Garage Technology Ventures, Bill Reichert. Hello, Bill.
Hi, Nelly. Good to see you. Thank you for having me.
Thank you very much for being with us today, Bill. And I have so many questions to you, both from my side and from a lot of startup founders in our network. But let me start as planned from obvious questions on what's going on in the market. You're now on lockdown or self-quarantine in Bay Area.
Right.
I'm in Europe. So what do you think? How it will influence the venture market?
Well, right. So, here in Silicon Valley, everybody is scrambling to try to understand exactly that. How is this going to influence their future, and what should they be doing right now? And as you might be able to tell, I've been around for a little bit of time. I've been around for a while. And so I've been through a few cycles in my career, initially as an entrepreneur. So I started my career as an entrepreneur. And then after 4 software companies, 2 of which went public, we started Garage Technology Ventures. So, for the last 20 years now, 20 years. The last 20 years now, I've been on the venture capital side of the market. So what is strange about this event is that there's so much more uncertainty, such a long period of time compared to previous events, and so when the financial crisis in 2008, 2009. We pretty much knew what was happening, and it affected everyone. It was a uniform for the venture capital industry. The strange thing about this one is that it's very asymmetric. It's not, uniform for everyone. And so some companies that are doing really well right now, because they're digital, they're logistics, they're sort of in that category of services that are actually seeing increased demand now, which is sort of good for them, right? And then there are others that are just totally getting whacked, right? So if you're in the travel, ouch, right? Or hospitality. So those guys are totally getting whacked. So it's very asymmetric in terms of how it's affecting our portfolio companies, and as entrepreneurs, how it's affecting entrepreneurs. And then, we're seeing a lot of companies who are the middle, enterprise software companies where, the enterprises aren't going to go away, but enterprises are certainly going to be cost cutting. Pretty much everybody's going to have to cost cut. There's, certainly we're going to have a significant global recession. And so you're trying to figure out, how do I manage through a global recession? How long is it going to last? When might it come back? So it's, so right now it's uniform, all hands on deck, everybody's panicked. It depends on the situation of each company. The good news, I guess it's good news. The good news is that there is a ton of cash in the world. There's just, there's massive amounts of cash in the world, right? It's just not evenly distributed, right? That's, so, there are, significant pockets of cash, of this investment capital that has to go to work somewhere. So you don't really want it in the stock market. You don't really want it in the bond market. You probably don't really want it in real estate. So there's all of this capital in the world that doesn't know where. And a chunk of that capital still remains in venture capital. And so what we're seeing is all of us investors are trying to figure out what's the hot opportunity that we should be jumping on right now. So, yeah, I'm not going to invest in face masks, right? I mean, that's hot, but that's not, it's not the future, right? But there is there are a bunch of obvious things that are going to come out of this that all of us are chasing now, right? From sort of at the sort of at the point of the spear, as they say, in medicine, life science, drug development, vaccine development, testing, antibody testing. It's crazy that here we are, it's 2020, and we don't know how to deal with a virus that we know has been around forever, right? So the virus, this is a novel coronavirus, but the coronavirus has been around for a long time. And we don't know how to attack it, right? So, it is amazing that it's 2020 and we do not know how to kill viruses in the human body. The only way you can kill a virus in the human body is to get the human body to kill the virus in the human body, i.e. is through our immune system.
Yeah, stimulating immunity.
Right. So unlike bacteria, right? So bacteria we know how to kill with antibiotics, but viruses we don't know how to kill. Now, again, I don't know what your experience was when you were growing up, but when I was growing up, which was obviously before you were growing up, when I was growing up, we were told that, science was advancing so fast that by the year 2000, we would have a cure for the common cold, right? Mm-hmm. We do not have a cure for the common cold, right? We haven't figured out this virus thing yet. So there's going to be massive investment in this whole idea of how do we attack viruses? How do we, address viruses? So again, that doesn't mean that there will be success, but certainly, everybody is trying to figure out, is there some opportunity for breakthrough at that, cutting edge of what this whole crisis is stimulating? And then you roll all the way back from there in terms of all the other things that need to be done better. And a lot of them are digital. A lot of them are information systems related, right? And so what we've learned is that we do not know how to connect the dots around a pandemic. That it's an informatics kind of problem that we thought, boy, we're globally connected, we're always on, we have all this data, we have big data, we have AI. Certainly, we should be able to marshal the data to manage an epidemic. And, oops, we can't, right? So it seems like the Koreans and the Koreans and the Taiwanese and the Hong Kongese and the Icelanders, whatever. So some countries, have been able to marshal the resources to collect the data to manage this epidemic. But, the US didn't figure it out, and most of the other Western countries haven't been able to figure it out in any sort of, IT-based, way. And then you roll back to supply chain and all of that. The bad news is, I think we're going to, see some decrease in globalization because of this, because people are anxious about their supply chains. So the best hope is that we build some redundancy into our global supply chains, so that, like the internet was designed to be redundant, we aren't dependent on a single point of failure in our supply chains, depending upon, what our business is. So we figure out, sort of alternate solutions in cases of supply chain disruption. So that'll be, an investment opportunity or process that goes on. I think we'll see some acceleration, for example, in, sort of additive manufacturing and, quick turnaround manufacturing technologies. We're going to see an acceleration of Industry 4.0 because, we're going to want to be able to flip a switch and change production much more quickly than we can today. So, that's a whole broad spectrum of opportunity that I think we're gonna be seeing going forward. So, I do think this is going to trigger a whole bunch of innovation and investment. It's not going to be fun. I mean, sort of in the interim. But I do think there's, all of these domain opportunities that are going to be great opportunities for entrepreneurs and investors going forward.
I really love this approach when you speak not about dangers or challenges, but about opportunities, seeing them behind the crisis. As you know, previously we made tens of interviews with venture investors, and some of them were following another logic, like being more careful, taking everything on hold, on pause until they understand what's going on, etc. And only few of them were, like you, expanding investment activities, becoming more proactive, more flexible, identifying new opportunities. So as far as I understood, you are doing this exactly in Garage Ventures.
Yeah. Well, we're doing both. We are doing both. So, so we're, portfolio company by portfolio company, it depends on where they fit on that spectrum, right? Are they taking advantage or are they getting whacked, right? Or where is it somewhere in between? So yes, at a very tactical, pragmatic level, we're telling each of our portfolio companies to do a, very careful but quick 360-degree assessment of, where they are and what's in their environment. So so we are telling each of our portfolio companies, assess each of your stakeholders, right? So who are your stakeholders? So obviously, for most companies, the first highest anxiety is their team, right? So how is your team doing? They coping? And then what are things you can be doing to preserve your team, to maintain the resilience of your team, to sustain your team through this? Because any company that wants to sustain has got to keep the team. So there's a natural reaction to just slash, right? We hear the stories of people firing people, and there are obviously you may have to furlough some of your team. That may be necessary, but take a look at the team. Another set of stakeholders obviously is your customers, right? So what's going on with your customers? So you're a vendor to your customers, presumably. Are your customers hurting? I mean, what's going on with your customers? And we're encouraging people, reach out to your customers and make sure you have communications with your customers. You do not want to be blind to what's going on with them, and you don't want them to ignore you. So, they may or may not have any choice in terms of whether to keep buying from you or to keep paying you. They may or may not. But if you don't reach out to them, it's going to be really easy for them to shut you off. So make sure you canvass your customers and find out what's going on there and see if there is any sort of bridging mechanism there. And then another set of stakeholders are your vendors, right? So other than your employees, presumably you have vendors for most companies, the single most significant vendor probably is your landlord. I mean, you don't think of your landlord as a vendor, right, in a traditional supply chain sense, but in terms of people you pay, your landlord's going to be probably the biggest check other than payroll. And so, we're telling people, reach out to your landlord and negotiate with the landlord. You can't, again, don't be quiet, be active, be proactive in reaching out to your landlord. One of our companies, God bless, actually, the landlord reached out to our company to negotiate a bridge relationship. And so right now they're negotiating sort of a 50% discount for the next 6 months. So, I mean, we'll see. But every company and every landlord's got an issue right now, presumably. And then other vendors, depending upon what business you're in. If you have a supply chain, you certainly want to understand what's going on with anybody who's supplying you any sort of materials or third-party developers or whatever it is. Reach out to your vendors and understand what's going on there. Mm. And then, of course, the fourth stakeholder are your investors. So reach out to your investors. You do not want your investors to be reaching out to you, what the frick is going on, before you reach out to your investors and say, here's how we're managing through this period, right? So you want to be proactive investors. The entrepreneurs who are most proactive, oh dear, it says my internet connection is unstable. Can you hear me?
Yeah, perfectly.
Still okay? All right, good. Okay. So back to investors, right? So, the investors are most likely to be supportive of entrepreneurs who are proactive and communicating. If you don't communicate with your investors are not going to give you the mind share. And if you have a crisis, and you haven't been keeping your investors in the loop, they're going to be working with the other portfolio companies that have been communicating with them. And so make sure you reach out, even if you don't need them right now, even if things are okay, still reach out to your investors and let them know what's going on and how you are handling this situation. Mm-hmm. So that's sort of the tactical crisis mode management, that we're suggesting to every entrepreneur. And then depending upon how that 360 goes, then you got to figure out, okay, what's the situation in terms of cash, and what do we do? Are we okay? Can we survive? Can we manage through some meaningful amount of time? So, the good news for entrepreneurs is there's been so much cash up until now that, lots and lots and lots of companies have a reasonable amount of cash. Unfortunately, there are some who were planning on raising money now. This was the time. And so that's going to be a challenge for them. And, we can talk more about that.
Do you agree that valuations may fall as many other investors forecast? Okay, obviously a lot of companies were overvaluated previously, and we know that, especially in the Silicon Valley. But what do you expect will happen with valuations during this period, and maybe a year after even, because we don't know when it really ends?
Yeah, obviously. Well, again, it goes back to the question of where you fit on this skewed world map now, in terms of, are you in a high demand area because of this? If you're Zoom, your valuation is not going down, right? So, right. If you're Airbnb, you're in deep trouble. So it very much depends on where you are in that spectrum, which is again, a huge difference compared to the global financial crisis. During the global financial crisis, everybody's valuation went down. Everybody went down, right?
But we
In
don't.
this case, pardon?
Sorry, I said we don't see it now. I mean, that everyone falls down. So we can't call it global financial
Yeah.
crisis.
Right. I mean, the financial crisis was, very clear, very sudden, very dramatic because, at that point, we weren't even sure if our cash was safe, right? I mean, it was, the VCs had meetings to figure out, were our bank deposits safe? Fortunately in this environment, although, certainly if the central banks screw up, there could be a financial crisis in addition to a, economic crisis, distinction. But right now, I think everybody is reasonably confident that the central banks have learned their lesson, and they know, no matter what, we've got to preserve the banking system. We cannot let people worry about whether or not they're going to lose their cash. So there's a reasonable amount of confidence now in the world that the banking system will not collapse. That was not true, in 2008, 2009. I mean, that was a whole different worry. So now it's just an economic that's going to affect different people differently. So I mean, we're in negotiations right now to invest in a company that they just told us that they are 70% ahead of their plan because of the crisis. So, so they're in this sort of digital services space that is actually, where demand is increasing because of the crisis. So what they're telling us is, if you want to get in, you better get in quick because the price is going up. I mean, who would have thought, right? Who would have thought? But pardon?
What did you decide to jump in?
Yeah, we're gonna try to get in. So so that's the plan. I mean, we haven't concluded the deal yet, so we'll see. But then, there are other companies that they're, absolutely there. If they need to raise money now, it's going to be a down round. No question, right? And so what we're saying is, if you can convince investors to do a bridge note instead of doing a price round, then, because right now nobody knows what the right price is for so many companies. You don't know, right? So the stock market public comparables are kind of messed up. So, who knows how to do sort of public market comparisons. So if you have to raise money now, if you can convince investors to do a bridge note rather than doing a priced round, that might be, sort of the smartest way to do things. Because as an investor, I'm not sure how to price, some of these companies. And as an entrepreneur, you don't want to necessarily take a brutal down round price if it turns out that you're able to navigate your way through this and get, maybe some semblance of a flat price. So that's, I think, what's going around in the venture market in terms of pricing. Mm-hmm. But absolutely, there's going to be some fire sales. There's going to be a lot of companies that they're running out of cash, they're in a panic mode, and there's going to be, a real problem with their pricing. So like for example, a WeWork. So
For them, it's now a good excuse to say why they are actually collapsing.
yes, yeah. So right, they had obviously they had valuation problems long before coronavirus, but yes, you're right. So this is just an excuse, if not a reason.
Yeah, Bill, coming from general to particular, so what will happen with your own investment strategy at Garage Technology Ventures? I mean, you will amend it somehow, you will increase investment because you are focusing on seed stage. It is already very risky and very uncertain field of investment.
Yeah, well, so I should be clear, and I guess I don't know it. I mean, it shows up on LinkedIn, but it doesn't show up on our website. But one of the things that we've done over the last couple of years is we affiliated with a larger global venture fund called Pegasus Tech Ventures, which is a $1.5 billion venture fund, sort of originally out of Japan, but is now headquartered here in Silicon Valley. So that gives me sort of much more breadth, sort of of opportunity, and much more opportunity to play in a variety of different segments. But so as far as seed stage investing goes, it hasn't really changed the dynamic that much, because all the companies we're looking at now in the seed stage, they have no prospect of being successful companies for at least 2 years anyway, right? So it does affect to some extent your thinking about valuation, but at the seed stage, for the most part, what you're doing are convertible notes or safe notes, or so most of the stuff we're doing at seed stage, we're not anyway. So back to my point about doing convertible notes rather than priced rounds. So we're not pricing them anyway, and so that makes it sort of easier to not worry about pricing. Then the question is, where's the demand for the product or service? And so we're certainly so we're actually talking to a company that is in the travel space, but their idea, their idea is to help enterprises manage their travel spend more efficiently. So it's an enterprise SaaS model, which is certainly related to how much travel takes place, but is not sort of directly dependent upon people booking flights today. So again, their business model their business model assumes the world will come back eventually and people will travel again eventually. And so for us, the issue is, how are they, what's their revenue going to look like over the next, 12 to 18 months? And initially, before the crisis, they had sort of a nice revenue ramp. So now that's going to be put on hold. And so, so as an investment strategy, do we really want to fund them for this indefinite period of time while things are sort of flat? So, it affects, sort of the sector, affects our decision. But as I said, businesses that are, there are a bunch of life science businesses and med tech businesses where the virus is hardly a concern at all in terms of our investment strategy, or it's a net positive, because the assumption is there's going to be increased investment in, sort of this layer of medical, IT, health, wellness, and biopharma that is going to get more money, over time, is going to be more interesting over time. And so investing early in these companies, makes some sense. So, so every company, every opportunity is a separate analysis. Again, different from the global financial crisis, when basically we were, no new investing, just try to figure out which one of your portfolio companies to. That was the difference.
Bill, and how this situation, at least it should somehow affect your deal origination process. I mean, previously you could easily participate in tons of events in Silicon Valley, meeting founders face to face, shaking hands, etc. How do you do it now?
Yeah, I mean, so there's still, we were talking the other day that everybody, everybody now is running twice as fast just to stay in the same place. If you know the Alice in Wonderland story, right? Okay. So, I mean, we are getting bombarded, all the time. I mean, everybody's doing a virtual pitch day, a virtual demo day, a virtual this, a virtual that. So there's still all of the activity, if not even more, in terms of, sort of inbound plus opportunities to connect with others. So it hasn't, other than this sort of practical aspect of first meetings. And so now, it used to be that probably when there was a company that was local, that was very interesting, we would say, come into our office and let's have a meeting, right? So, we don't do that anymore. And so now it's kind of crazy, because now, we're booking meetings back to back to back to back. And you get on Zoom and you're talking to the entrepreneurs and you have no idea what part of the world they're in. I mean, obviously, if you do your homework, if you do your preparation before the meeting, but, we're going from Vietnam to Japan to Prague to Germany, Israel to Chicago, to San Francisco, right? And it's like meeting after meeting after meeting, and you just don't know. I mean, it could be just any part of the globe all of a sudden that you're talking to in the next meeting. So it's, in that sense, it's sort of flattening the world for entrepreneurs. If it's interesting having this call yesterday morning with Israel, which we've certainly done that before. But what it means is that the meeting we had with this Israeli company was the same, in terms of the sort of relationship we built and the experience we had, was the same as the meeting we had with a company in Mountain View, which is, a mile that way, right? I mean, so it flattens the world for entrepreneurs if you're really good at Zoom. If you know how to do Zoom, it can be, ironically, sort of a benefit, because now, sort of we can deal with everything digitally. Even 10 years ago, one of the things that happened during the global financial crisis is everything shrank in. And so we stopped paying attention to the rest of the world, because there was so much to worry about here in Silicon Valley. and we didn't go. You know, we didn't flip. You know, there was plenty of video conferencing. You know, in 2008, 2009, it's, you know, Zoom did not exist, but obviously Skype and Google Video and, you know, WebEx and what all these other guys, they all existed. And but we didn't. I mean, we didn't have to bother because we could meet people. But it gave, what it meant is that because of the nature of that crisis, we all sort of huddled together, you know, in Silicon Valley. And, you know, we weren't going to waste our time traveling to go talk to other entrepreneurs, right? So the nature of this crisis is, it doesn't matter if you're a mile away or 10,000 miles away, we have the same connection. And so it is, and, you know, it'll be interesting to see if this persists. But one of the complaints that entrepreneurs have is that, you know, that you have to be in Silicon Valley to connect with Silicon Valley. I mean, really hard to connect if you're not here. And now we're all kind of sort of feeling that I can connect with you in Barcelona or, you know, Burlingame, which is a town up the road. Right? So it'll be, I don't know. It could change the nature of relationships between entrepreneurs and investors, you know, because of the dynamic of connecting online. We'll see.
If it happens, that would be really so amazing, because even in 2020, we have such an undemocratic, I would say, distribution of these skills, financial resources, etc. If you are privileged and lucky to be in Silicon Valley, or even in London, in Berlin, in other cities with infrastructure, you have access. But if you are from some small village somewhere, you kind of outside.
You're screwed. No, I mean, and so this, you know, it revives one of my dreams that I don't think is ever going to happen, but I think it's a brilliant idea. Let me tell you. I think somehow, somewhere, and maybe it's Estonia, I don't know, but somebody should create a global digital corporate registration where the corporate law is the same for everyone on, so that, you know, if we could create this virtual venture corporate registration and, you know, domain domicile, because right now when I'm talking to these guys in Germany or in Vietnam or whatever, I've got this overlap. I'm connected, we're talking, we're doing demos, we're, you know, it's there's no limitation in terms of our ability to interact. But as an investor, boy, do I want to invest in a company that is registered in Vietnam? No, I don't, right? I don't. Because, you know, I mean, believe it or not, Vietnam, I mean, so there are plenty of countries that do not follow GAAP accounting rules. I mean, so, but most countries that don't follow GAAP, they at least follow IFRS, right? I mean, so at least there's a global accounting standard for most companies, for most countries. Vietnam has its own accounting standard, the VAS, the Vietnam Accounting. So I mean, it's crazy. So how do you invest in a company in Vietnam? I mean, so it happens we are investors in a company in Vietnam, but they're registered in Singapore. So, you know, okay. So we're kind of okay with Singapore, right? We're kind of okay with Singapore, but if only we could create a global corporate registration system, as, sort of a Delaware in the sky, it would make venture capital, so much more fluid than it is today.
Bill,
But
then I should just mention, I don't know if it is the faith or whatever, but
yeah.
a friend of mine from Switzerland, he's a German guy, and he is a Swiss big blockchain expert. He's
Yeah.
working on the project to create this kind of global registry, but on blockchain or DAO concept, because he understands that current regulators are not ready to implement it in the traditional environment. So he wants to bring to the market the possibility to do it on blockchain within DAO concept. If all the companies in the network accept this, then it becomes the rule, a kind of. If you want, I can introduce you to each other gladly, and your dream will come true.
No, and I know in the block world, the idea of this decentralized, autonomous, whatever. I guess it's really hard for VCs to get their head around, what the governance is in that model, right? I mean, so as much as there is this theory of a, sort of a decentralized governance, entity, I think the money people will always want a top-down governance model, but that is as close as we've come. Obviously, nobody has bid off on that, right? I mean, and so I don't know who the entity is that could create this. I mentioned Estonia because, they've been trying to do their own version within the EU. But people, I think, prefer Luxembourg to Estonia. And so, I'm sorry?
Or Switzerland and Liechtenstein, which are a kind of
right, and then, or you have the the Jersey Islands, or it's crazy though. It's crazy that we have all of this sort of gaming around domiciles, and it just creates barriers to the capital. And so, yes, if your buddy wants to, if he has a brilliant solution, I'd love to figure out if there's a way to get there, but we'll see.
I remember that you have another call in 10 minutes.
You heard my computer go off, huh? Okay. Yes?
I will be short, and I want to ask you, for those entrepreneurs, I guess thousands of them who will watch our video, those who want to reach you out through cold email, for example, or contacting via website, how can they increase the chance of getting response from your side from their first cold message?
Yeah. Well, the best way is to say, I am a dear friend of Nellie's, and she said I should contact you, right? I mean, again, there's tons of, the advice to entrepreneurs is pretty uniform around the world. That if you want to get to an investor, it's best some form of warm introduction. And so, I'm maxed out on LinkedIn. I got all 30,000 friends on my on LinkedIn. So, and I never read my LinkedIn mail. So, but you should be able to find one of my close personal friends on LinkedIn. and hopefully you're connected with them. But something that will cause me to say this is not just another cold email, that will cause me to say this person actually knows somebody I know, and this person has actually thought about why they're reaching out to me, as distinct from including me on a email blast to 5,250 of their closest investors that they were able to get emails for, right? So the first is a genuine warm introduction. The second is the email has got to be clearly personalized, for me and our firm and our investment thesis. Never send an email to whom it may concern, right? No, that's not a good idea, right? And then some in the first paragraph of your email, you've got to get me to wow. You've got to get me to wow. And so, that's, again, you better have figured out what I mean by getting to wow if you want to reach out to me. That means you've got to be clear what you do. You've got to be compelling. You've got to have some value proposition that is 10x better than anyone else out there, that's going to make me say, wow, you can really do that. And then third, you got to be credible. You've got to say, yes, we can do that. And we proved it in a proof of concept we did with Toyota last year, whatever it is, right? So you can do that 20 seconds or 50 words. You can get to wow in one paragraph if you craft it carefully. So that's how people should reach out to me.
Awesome.
Okay.
Advice. Thank you, Bill. And maybe I guess it would be quite helpful if I put in the link in the description of this video with your pitch to the startup founders, with your advisors. You had a quite a good number of very, very beautiful advice on how to make a value proposition for 20 seconds, I guess. Yeah, 20 seconds.
Yeah. Right, exactly. So there's a 20-minute version of getting to wow.
No.
You want to, yeah, that's fine. They should go through the whole 2-hour version, right? Is that what you're saying? So, yes. So, that is key. Investors generally are irritated by entrepreneurs who haven't even bothered to go to the website to understand, sort of the investor thinking. So yes, show us that you have actually paid attention to what we care about.
Perfect. And the last question for today, Bill. You yourself told about big amount of cash on the market, which huge part of this is not yet, you said, in the venture capital markets. So how did you think yourself as a venture capitalist, how could you approach this extra cash, which is not well organized yet? I mean, not in VCs. How can you bring them as LPs to your fund, for instance?
Wait, as a VC or as an entrepreneur?
What
are you asking?
Entrepreneurs, I'm not sure that it is. Well, if you think that for entrepreneur it will be even easier to get access to this.
Yeah, no, I mean, well, again, I mean, so if you are an entrepreneur, do not limit yourself to the venture community when you are looking for investment, right? So there are several other significant investment resources, in most parts of the world. The angel community is their local angel community is their best bet. So closely related to the angel community, depending upon what part of the world you're in, are family offices. And so generally, sort of the second or third generation of corporate brands, right? The second or third generation, those kids have decided they don't want to do toilet paper anymore. They'd rather do high tech, right? So there are, sort of family office funds available out there, out there in the world. If you might be able to tap into that, which is then proximal to corporate venture capital, so corporate investors. So, reach out to your target customers or to your target vendors or partners, and they may be a source of capital for you. So those are, and then of course the venture capital industry. And then lastly, but then maybe firstly, government, right? In most parts of the world, the government has a pot of money, right, for entrepreneurs. For venture capital, I think we're just going to continue what we've always been doing and looking for these pots of money, at the highest level, the sovereign wealth funds, right? The country funds, like, Norway, right? Or Saudi Arabia, or whatever the case may be, right? So there's the sovereign wealth funds, and then there are the institutional financial insurance companies, pension funds, superannuation funds, whatever they're called in different parts of the world. And then there are endowments and trust funds and foundations. And then there are fund of funds, there are institutions. And then, there are family offices and others that invest in venture capital. So we're always we're always trying to tap into those big pools of money. I think what's going to happen, you're going to see a lot of VCs disappear during this recession. I mean, I think a lot of VCs are not going to be able to raise their next fund, and I think they're going to wind up disappearing. So there's going to be an increased concentration of venture capital, which is too bad, and that's because that'll make it harder for entrepreneurs, except to the extent they can reach into these other pots. So
then angel investors will rule the game then, if there will be less amount of venture investors. No?
Yeah. Well, and there will be fewer angel investors too. So, right, because they're going to get whacked as well. So the entities are going to shrink. The number of entities, angels and family offices investing in venture and venture capital firms, all of those entities are going to shrink, but there'll still be all that money out there, right? So you just got to find the channel to get there. So now I apologize, I got to jump.
I remember, Bill. Thank you so much for your time. Thank you. I wish all the startups listen to your advice, and this is way more efficient than 10 of advisors, professional coaches. Thanks a lot for your wisdom.
Thank you so much. Okay, take care. Let me know how it goes. Okay.
Definitely. Thank you.
Okay.